Hello and welcome. My name is Roger Philipp, President and CEO of Roger's CPA Review. Today we're going to be talking about SSARS 21, Statements on Standards for Accounting and Review Services, number 21. This is a new pronouncement that was issued in October 2014. A lot of the firms are using it today currently. I know for the CPA exam, it's supposed to hit the exam by July 2015. Now, what is SSARS 21 and why did it come about? It basically came about part of the Clarity Project. A couple of years ago for the auditing standards, we came out with the new Audit Clarity Project, AUC, made some adjustments to audit reports and basically some of the procedures we're doing in an audit. With ARC, which is SSARS, Statements on Standards for Accounting and Review Services, it basically brings clarity to the existing standards, makes them a lot easier to read, easier to understand, and most importantly, easier to apply out in the real profession. Basically what it does is it replaces all of the previous SSARS standards. So for the client, for example, it provides flexibility and affordability of professional services because in the past we couldn't really do an engagement to prepare financial statements. Now we just print them from the software and boom, we prepared those things. For the accountant, it allows simpler presentation and preparation of financial statements without the responsibility for the reliability of those statements. So that way someone else, for example, once you prepare and print out the statements, someone else can perform the compilation or the review or, for example, the audit. So what this standard basically did is it introduced a couple of things. First of all, the introduction of a preparation engagement. And with the preparation engagement, you'll see in a few minutes that this is an engagement where the client just says, hey, I need someone to prepare the financial statements, basically print them out from the software because I'm going to hand them off to someone else to do an audit, a review, or a compilation. Another thing it did is it eliminated the compilation that was for internal use only because we would say, well, internal use only, we don't necessarily need a report. Now you have to do a report in all compilations. The old compilation had 3 basic paragraphs, so it was kind of confusing because you had a compilation with 3 paragraphs, a review report with 4 paragraphs, so people thought that, well, maybe even though you say no assurance, no opinion, maybe there is a little bit more to it. So we wanted to take that compilation report and kind of dummy it down to relieve and eliminate some of that confusion as to what kind of assurance is or is the CPA or accountant actually giving. The standard review report was also modified whereby headings are now required for each of the major sections. So as you'll see, and that's very similar to the auditing standards, the AUC standards, clarity standards, where we'll have specific titles for each of the paragraphs, where in the past we didn't necessarily have those. It also officially creates this new type of engagement, which is an engagement to prepare financial statements, and that's for the client where we're preparing them and printing them out. So we have what we call ARC 60, which talks about the general principles. And these are the general principles for performing any of these, whether it is a preparation engagement, whether it is a compilation engagement, or if it's a review engagement. So we'll see ARC 60, which is general. Then we'll see ARC 70, which is for the preparation of the financial statements. ARC 80 for a compilation engagement, and then ARC 90 for the review. Now the ARC 60 basically says that some of the general principles that relate to all 3 of those engagements, and again, we used to have the 2 engagements, compilations, review, whoop, we added another one, preparation engagement for preparation of financial statements. What it says is in all 3 of these, you need to first of all adhere to the principles of ARC 60, the general principles. Those cover things like financial statements. Whose statements are these? Management is responsible for the financial statements. Ethical requirements. We want to make sure that the accountant will follow all of the ethical requirements in order to do any of these types of engagements or services. Professional judgment. In other words, the accountant should use professional judgment and also using all of their different experience during the course of the engagement. They need to be in accordance with SSARS, so that means they need to be familiar with all of the relevant sections and the explanatory areas of SSARS, which is Statements on Standards for Accounting and Review Services, which we'll expand on in a few minutes. Also, engagement level quality control means that the engagement partner is responsible for the direction, the plan, the supervision, and the performance of the engagement. So that was really important as far as the general standards that are going to relate to all three of these services we're going to provide. As I said, ARC 70, that deals with the compilation, the preparation engagement, 80 deals with the compilation, and of course 90 deals with the review. So let's talk about this new preparation of financial statement engagement, ARC 70. Basically what it says is, and this is going to apply to all three of them, is first of all, you are now required to get an engagement letter that is signed by both the client and the accountant as well. So we want to clearly explain what is happening in the engagement, who is responsible for what in the engagement. So that is required, and it's required, as I said, to be signed by both parties. Our objective in a preparation engagement is to prepare financial statements in accordance with the applicable financial reporting framework. So that means, what framework are we using? Is it a general purpose framework? Is it a special purpose framework? General purpose framework might be GAAP or IFRS. Special purpose framework could be OCBOA, other comprehensive basis of accounting, cash basis, tax basis, contractual basis, regulatory agency basis. So it's some other basis other than your general purpose type basis. You're not required to evaluate whether or not the accountant or preparer is independent, because when you're doing a preparation of financial statement engagement, independence is not required. So you don't have to evaluate if you are or not. This service is considered a non-attest, non-assurance engagement. Non-attest, the attest function basically says independence, so you don't necessarily have to be independent. And assurance says, are you giving some sort of assurance? Positive assurance would be an opinion, like an audit. Negative or limited assurance would be like a review. A compilation, no assurance. And an engagement, same thing, no, non-attest, non-assurance engagement. As far as what's in the engagement letter, and you'll see a list there of items that are included, you'll notice that the first 5 are included in all 3 of these services. So for example, the objective of the engagement. So the objective of the engagement is to prepare financial statements in accordance with whatever the framework is, right? What is the framework? Could be the general purpose or special purpose framework. Management's responsibility. So we want to clearly state that management is responsible for the preparation and fair presentation of the financial statements. That's going to occur in all 3 engagements. Also, that they're in accordance with the general principles, which is the ARC 60. The accountant's responsibility, what is our responsibility? To comply with SSARS, Statements on Standards for Accounting and Review Services, in accordance with the ARSC by the AICPA, which I'll show you in the report in just a minute. Also, we need to identify the financial reporting framework being used. As we said, is it general purpose, special purpose? And then, what conditions do you expect to exist? So while you're doing this, do you expect things to be, for example, non-GAAP or inadequate disclosure? Also, one of the specifics in that engagement letter for a preparation of financial statements, ARC 70, says that management agrees that each page will include a statement that, hey, no assurance is provided. So no assurance is provided. We want to be clear about that. So while we're saying that, so on each page of the financial statement, you've got the numbers. We want it to be clearly stated there's no assurance, because this is a non-attest, non-assurance type of engagement. If for some reason the client will not agree to that, we either have to disclaim an opinion or try to convince them to switch to a compilation, so that way we can perform a regular compilation. You'll also see that in all of these engagements, it's performed in accordance with SSARS, Statements on Standards for Accounting Review Services, by the ARSC, Accounting Review Service Committee of the AICPA. Also, in this, there is no report, and again, as I mentioned, each page is, hey, no assurance is provided. So what is the documentation in a preparation engagement? The documentation is the engagement letter, signed by both, and a copy of the financial statements. Again, there is no report. And that's something you'll see on the exam quizzed, because is a preparation engagement a report? No. A compilation have a report? Yes. A review have a report? Yes. An audit have a report? Sure. The next thing here is a compilation, which is governed by ARC 80. Now, just like we said earlier, is there an engagement letter? Yeah. Who has to sign the engagement letter? Both parties will sign the engagement letter. The objective of a compilation, really what we're doing is we're going out, we're taking management's information, representation, putting it in the form of financial statements. The objective is apply accounting and financial reporting expertise to assist management in the presentation of financial statements and report in accordance with ARC 80 without giving any assurance. So we're giving no assurance in a compilation. And basically what the assurance will say later on in a review report is we are not aware of any material modifications that need to be made in order for the statements to be GAAP. We're not saying that the statements are in accordance with the framework. We're saying we're not aware of the fact that they're not. So in a compilation, you're giving no assurance about whether or not there are material modifications that need to be made in order to be in accordance with the applicable financial reporting framework. So that's what we're doing. So basically we're trying to assemble, compile, put the information together. What do we have to do? We need to understand the financial reporting framework and the significant accounting policies. So we need to understand that for both a preparation engagement and for a compilation. You need to understand the framework and understand the policies. The other thing here, you have to do a little bit more work now. We're earning our money in a compilation is you have to actually read the financial statements, and you have to read them to make sure they're obvious of any material misstatements or inappropriate in form. So you have to make sure that they're prepared correctly, that they look okay. So reading those things. Now most of you would say, wouldn't you read it in a preparation engagement? You'll just Control-P and print it out and hand it. Well, you probably would, but it's not a requirement. Here, in a compilation, you need to read, understand, and read. Now, do you need to be independent to do a compilation? I'm giving no opinion, no assurance. I don't have to be independent. But if you're not independent, then you need to add a paragraph. And if there is a title that's being used, let's say you have a title in the compilation, then it would say independent compilation report. If you're not independent, get rid of the word independent. Also add an extra paragraph, an explanatory paragraph saying, hey, we were not independent with respect to XYZ Co. And if you want, you can give the reasons and say because we had a direct financial interest, something like that. It is considered an at-test engagement because we kind of assume you're independent unless you tell us otherwise. However, it's still a non-assurance. We're giving no assurance, no opinion about the financial statements. Now, do you have to sign an engagement letter? Yes. Who signs it? Both parties. What's in the engagement letter? As we covered, the same first several elements, the objective of the engagement, management's responsibility for the fair presentation and preparation of the financial statements, accountant's responsibility to comply with SSARS, limitations on the engagement. You want to identify the framework. And here the one difference is the expected form and content of the compilation report. Because remember, we are issuing a compilation report, so we're going to talk about the expected form and content. Is there going to be an explanatory paragraph? Do we have any idea? What do we expect? And again, governed by SSARS, by the AICPA. Report required, 1 paragraph. And if you think you need to explain something, there's some kind of report modification, then we're going to add an extra explanatory paragraph. Now the thing is, with this compilation, as I said earlier, it used to be 3 paragraphs. So it looked, overwhelming, and it looked like, wow, you must be actually taking some sort of, or making some sort of assertion here, or taking some sort of assurance. You're not. And that's why they said, you know what, it's too confusing to the general public. Let's make it much easier, much clearer that we're actually not giving it a responsibility. So you'll see here in this example of a compilation report has the title, Independent Accountant's Compilation Report, to whoever it's addressed, the board of directors. Management's responsible for what? They are responsible for the financial statements. Whose statements are these? Management's. So it clearly states these are management's financial statements, and we list the statements. We've got a balance sheet, income statement, cash flows, statement of changes in stockholders' equity, and the footnotes. And they're doing this in accordance with whatever the principles are generally accepted in the United States. Then you explain what you've done. We have performed a compilation. We've done it in accordance with what? SSARS by the ARSC, Accounting and Review Service Committee, by the AICPA. So what I tell our students is, remember that SSARS by the ARSC of the AICPA. So it's important because they like to test that. And I'll talk about it later, but you might see a multiple choice question or a couple. You might see a task-based simulation where they're asking what's correct or incorrect with this report that some new hire issued. So you've got to make sure you're familiar with the terminology. We did not audit or review. And I tell people to kind of look up in life, right? We look up. You go, here's an audit. here's a review, here's a compilation. So when you're doing a compilation, you look up and say, hey, we didn't do an audit or review, the purpose of which is an opinion or assurance, and accordingly, we do not express either. So you're saying we don't give an opinion, we don't give a conclusion, we don't give any assurance. So we're clearly stating that. In a review, we're going to give a conclusion, right, about assurance. But here in a compilation, so you look up. And I mention that because when we talk about a review, you're looking up, right, in life. I compare myself with, wow, how am I doing? Compare myself to Trump, right? I don't look down and go, well, I'm better than that person. I look up and try to strive. Same thing here. Compilation, look up to an audit review. Review, look up to an audit and say, hey, it's less than an audit, and we'll see that in just a minute. Accordingly, we do not express. That is your disclaimer saying, hey, we're not expressing an opinion, we're not expressing any assurance. Then what they added to with the new standards, they said signature, which was there, and then just like in auditing, we added city and state, so we add the city and state, and the date is the completion of the compilation. So for a compilation, we're going to have the engagement letter, which we talked about, a copy of the statements, which is just like we had for a preparation, but you're also going to have a copy of the accountant's compilation report. As far as a review, now a review, we're actually earning some money, right? I mean, we got to work for our money here because in a review, we're actually doing some sort of tests, not tests, but some sort of procedures, we'll say. And you'll see here, I put something called AICPA, and what that is at the top, those are the different types of procedures we perform in an audit. So in an audit, what do? We do inquiry, confirmation, observation, recalculation, reperformance, inspection of assets, inspection of documents, and analytical procedures. So those are all the different procedures we perform in an audit. Why? Because you're giving positive assurance, which says, in my opinion, blah, blah, blah. In a review, we're giving limited or negative assurance. That's why we're only doing the first and the last, which is IA. What is that? I, inquiry, A, analytical procedures. So in a review, we're going to get these statements, we're going to do some analytical procedures are ratio analysis. It's based on the expectation, anticipation theory. What did I get versus what did I expect to get? And then you're going to look at things and go, this doesn't look right. Maybe there's an error. So it's expectation. That'll lead you to go back and do more inquiries to get clarification to see what's going on. So you need to do inquiries and analytical procedures. That's really important. Management rep letter is required. What is a management representation letter? It's generally received at the end of the engagement. In an audit, same thing. It basically talks about the representations that management has made during the course of the engagement. So it is a letter you have to get. If you do not get this, you cannot issue a review report. If you do not get it, you cannot issue an audit report. So it's really important, it's imperative, it is required to get a management representation letter. Now, as we're looking at this in a review, remember I said you look up, right? So in an audit, what do you give? Positive assurance. In my opinion, the statements are presented fairly in conformity with this financial reporting framework. Positive assurance. In a compilation, no opinion, no assurance. I can't give any opinion or any assurance about whether or not these statements are presented fairly or there are no material modifications. In a review, you say, I can't give an opinion, disclaimer. But you give limited or negative assurance saying, hey, I'm going to give you limited assurance that I'm not aware of any material modifications that need to be made in order for the statements to be in conformity with whatever the financial reporting framework is. So I kind of equate it to love, all right? Positive assurance, I love you. Compilation, I have no opinion or no assurance about my love for you because I just met you, okay? A review, I can't say that I love you, but I'm not aware of the fact that I'm not in love with you. Boom, and then I get slapped, right? So you can see the difference. Positive assurance, opinion. In my opinion, it is or isn't. In a compilation, no opinion, no assurance. In this review, no opinion about GAAP, no opinion about the framework, but I'm not aware of any material modifications in order for them to be GAAP. I'm not aware of the fact that I'm not in love with you. Right? You can see why I was single a long time. All right, what is our objective? Obtain limited assurance as a basis for reporting whether the accountant is aware of any material modifications that need to be made to the statements for them to be in accordance with the applicable financial reporting framework, primarily through what? The I and the A, the inquiries and the analytical procedures, the study of data comparisons and relationships. What do you need to do to perform a review? Understand the framework and the policies, which is just like in the previous two engagements, preparation engagement for financial statements and a compilation as well. We need to understand the industry and the entity. So we need to understand, have knowledge about the company itself and the industry that we're looking at. Also, obviously, perform the IA, analytical procedures, and do some inquiries. Now, because we're giving some sort of assurance, you must be independent. So we're going to have to make sure we're independent and go through all those procedures. This is considered a test engagement. So let's review. Preparation, not an attest. Compilation isn't a test but no assurance. Review is a test and assurance engagement. Because what are we obtaining? Limited assurance. Listed in the engagement letter, same things we've talked about: objective, management's responsibility, accountant's responsibility, limitations on the engagement, identifying the applicable framework. Most importantly, the last item, which is the difference, expected form and content of the review report. So we had that in a compilation. What was the expected form and content of the compilation? Here, what is the content of the review report? Again, governed by whom? SSARS by the AICPA. So SSARS by the ARSC, Accounting Review Service Committee of the AICPA. Now, you are required to draft a report. Now, this report looks a little bit more like an audit report because we do have specific headings. Some of the new pronouncements also said that the second, third, and fourth paragraph, I have to get those fingers, second, third, and fourth paragraph are required to have a heading. The first one, I call it the introductory paragraph. You could or you don't have to, but the others are required. The headings are the introductory paragraph, not required. The second one is management's responsibility. Whose statements are these? Management. So we're mentioning it's their responsibility. In a minute, you'll see what. Accountant's responsibility. What is our responsibility to do? SSARS, ARSC, AICPA, okay. And then the accountant's conclusion paragraph. That is where you're giving your limited or negative assurance. Now, if there's an issue, remember in a compilation, if we added an extra paragraph, it's an explanatory paragraph. Here in a review, it is called an emphasis of a matter or other matter paragraph. That is similar to what we now do with the Audit Clarity Project in an audit report. Because in an audit report, we used to call it an explanatory paragraph. Now we call it an emphasis of a matter or an other matter paragraph. So if there's something you need to modify the report and mention, you'd add a fifth, maybe sixth, however many you need paragraphs in order to emphasize whatever the issue was so you can clearly explain that. Now, as far as an example review report, it has a title, independent, because of course you cannot do a review unless you're independent. We've got who it's addressed to. Here's your introductory paragraph. And basically you're just introducing, you're saying, okay, we have reviewed. And then you go through the statements. We have reviewed the financial statements of X company, including the balance sheet, income statement, statement of change in stockholders' equity, cash flow, and the notes to the financial statements. Those are the notes that are in the back of the financial statements. What kind of procedures are we doing? Oh, a review includes what? Analytical procedures and inquiries of company personnel. Looking up in life, remember you look up, a review is less in scope than an audit, the purpose of which is expressing an opinion. Accordingly, we do not express an opinion on these financial statements. That's your disclaimer. You're saying, hey, I can't give an opinion, but you are going to give a conclusion a little bit later in the paragraph called accountant's conclusion. What is that conclusion? Limited assurance. Next paragraph, management's responsibility. Now, with management's responsibility, we're basically mentioning that management is responsible for the preparation and fair presentation of the financial statements. Remember, whose statements are these? Management's. So we clearly mention, hey, you guys are responsible for preparing these, presenting these, getting them to us. We're also mentioning that management is responsible for, and I like to use memory aids or mnemonics, DIM, D-I-M. Management is responsible for design, implementation, and maintenance of internal control. Because internal controls create the numbers. When we do a regular audit, we're going to go through and look at internal control, test internal control, give an opinion on internal control, and so on. Here in a review, you don't look at internal control. And I'll mention that later, but in a compilation, no. Preparation engagement, no. Review, no. In an audit, yeah, we got to look at internal control. Here we don't, so we're going to mention that who's responsible for internal control? Well, we're in the management's responsibility paragraph. My guess is management. So management is responsible. So it says this includes the design, implementation, and maintenance of internal control relevant to the preparation and fair presentation of the financial statements that are free of misstatements, whether due to error or fraud. So we're mentioning that, again, that's management's responsibility. What do we have to do? Our responsibility is to make sure that we've performed the engagement in accordance with SSARS by the ARSC of the CPA. So, Statements on Standards for Accounting Review Services, and this is 21 we're talking about now, of the ARSC, Accounting Review Service Committee of the AICPA, American Institute of Certified Public Accountants. Those standards require that we perform procedures to obtain limited assurance. So we're performing procedures, what are they? Inquiry analytical procedures, to obtain limited assurance as to whether or not the statements are free of material misstatements. Material modification that should be made to the statements in order for them to conform to standards generally accepted in the U.S. Then the last sentence here is, we believe the results of our procedures provide a reasonable basis for our conclusion. And what follows is the conclusion paragraph. That's called the accountant's conclusion. This is where you're actually giving your limited assurance. What does it say? It says, based on our review, we are not aware of any material modifications that need to be made to the accompanying financial statements in order for them to be in accordance with principles generally accepted in the United States, or GAAP, or a special purpose framework, or whatever framework it is that we're looking at. And that's what we're saying. So again, it's kind of like a horse with blinders, because you're a horse and all you can see is what's in front of you. So all you're looking at are those inquiries, analytical procedures, that's it. So based on the itty-bitty, teensy-weensy amount of work we've done, we're not aware of any material modifications. Now, what if you become aware of some? Then you add an extra paragraph and say, with the exception of the following paragraph, based on our review, except for the following paragraph, we're not aware of any material modifications. And then in the next paragraph, you would add whether it's an emphasis of a matter or an other matter paragraph. That's where you would add it. Then just like the others, signature, city and state, and the date that you complete this review. So what is some of the documentation in a review? The engagement letter, which was consistent all across. We've got communication with management regarding fraud or non-compliance with laws and regulations. We want to make sure that we've had some communication. Communication about if the accountant expects the report to include one of those paragraphs, the emphasis of a matter or the other matter paragraph. We want to mention any communications with other accountants that have audited or looked or reviewed or done anything with significant components of the financial statements. The thing that is required we have to get as well, besides the engagement letter, is a management representation letter. And that's called a management rep letter or a client rep letter or just a rep letter. That is a letter of all the representations that management has made to us during the course of the review. Then we're going to have the reviewed financial statements and, of course, the review report. And what are we giving in that report? Not positive assurance, not no assurance, but limited assurance. We cannot give an opinion, but we are not aware of any material modifications that need to be made to these statements in order for them to conform to whatever the framework is. Now, I set up a little comparison here so you could kind of see how it's like everything, a little less than everything, a little less, and then just an audit. So when you look at the different types of services or engagements, we have an audit, a review, compilation, and preparation engagement. So what is required for each? And this is just a summary. I have a huge long chart, in my course, but this is just to kind of summarize. So obtain a signed engagement letter. We just learned yes, 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 yes. How about reading the statements to ensure that they're, well, in a preparation, you don't have to read them. In a compilation, you read them. In a review, you read them. And in an audit, I guess I should go up this way, you do. Obtain knowledge of the accounting principles and practices. In a preparation, no. In a compilation, no. In a review, yes. And in an audit, yes. Making inquiries. Well, we know that. Inquiries and analytical procedures for a preparation, no. Compilation, no. For a review, audit, yeah, because that's the I-Korea. You do the I and the A and everything else in between. I-Korea. Sí, por supuesto. Communicate with predecessor accountant. Do you have to talk to the old accountant? Well, if you're doing an audit, yeah. For the other three engagements, no. Do you have to look at internal control? We just talked about that. For an audit, yes. Review, no. Compilation, no. For a preparation engagement, no. So those are, again, just some of the things that we do and we don't have to do. And it's just so you can kind of see the hierarchy. Audit, positive assurance. Review, limited or negative. Compilation, no assurance. Preparation, no. Preparation, just think of you're preparing, you print it out of QuickBooks or whatever, print out the statements and give it to them. Then they're generally going to take those and give them to someone else who's going to do a compilation, a review, or an audit. So in the olden days, we didn't have any standards that covered that procedure. Now we do. You've got ARC 60, which says, hey, you know what? These are the general standards for everything. And then you have ARC 70 that tells you what you need to do for that preparation engagement. As I mentioned earlier, when does this go into effect? Well, basically it says for periods ending on or after December 15th, 15, but retroactively companies are currently using it. And as far as when does it hit the exam, that was the third quarter of 2015, July 1st. So what does that mean? How is it going to show up? Well, the way reviews compilations thus far have showed up, multiple choice, task-based simulations, because you remember you've got a certain percentage of multiple choice, certain percentage of problems, like 60-40, although they're talking about adjusting that as well. When you look at that, multiple choice, easy. Does it have a report? Does it not? What's included? What isn't? When does SSARS 21 apply? When does it not? A task-based simulation, and I've seen this kind of question where they give you a report and it says the assistant created these bullet point notes. Do you agree or disagree? Do you concur? Is it incorrect or correct? And so on. And so as a task-based problem, you go through and bubble it in to show the examiner that you understand what the report should look like. So I try to teach the students and say, look, here's what they gave you. Think about what it should look like. It's a review, boom, boom, boom. It's got 4 paragraphs. There's a modification. It's got a 5th paragraph. What should go in each? You've got your intro. You've got your client's responsibility, management's responsibility, accountant's responsibility, accountant's conclusion, so you know what's going basically in each paragraph, and those are some of the elements. So you need to understand the performance, the characteristics, the composition, what's made up in each of the reports, the different circumstances, and when is each engagement appropriate, when is each engagement not appropriate. So what do we do in order to, for example, keep our students prepared and up to date on all of this? Well, I just got out of the studio refilming everything. What does that mean? It means that we have to go in and we meet with the AICPA several times a year. We have a great relationship with them. So they let us know what's changing. We also know from the industry what's changing, but they let us know more importantly when it's expected to show up on the exam. So in this case, we were preparing, is it January 1st? No, they said we're going to push it off to July 1st. Great. So then we go. I have an editorial team that we go through and prepare the material, reading all the detailed codes and so on. Then we take it, summarize, simplify, make it understandable. Then we'll go and refilm it. Then we make it available for our students well before the exam actually launches, and we'll go through, update all the homework questions, past AICPA questions, our IPQ interactive practice questions software, which exactly mimics the AICPA exam. That way, everything you need to know for the exam regarding SSARS 21 is always completely updated for the students so they know exactly what it is they need to know and when they need to know the material. So that, my friends, is a quick overview of SSARS 21. Thank you so much for your time. We hope you enjoyed the presentation on the new and exciting updated SSARS 21. I like to say good luck on your career. Also, please stay tuned for more exciting webcasts for any new and exciting changes. All right? Have a great career in accounting and see you soon. Thanks so much.